mentorship. You made a very right decision being here because not only I'll be teaching you how to be very good in the market, I'll be giving you rules, things to look out for to be profitable with this strategy. This strategy is very effective, and a lot of mentors you are seeing out there, they make use of this strategy. And if you follow the way I'm teaching this strategy, and if you follow the way I trade this strategy, follow the rules and everything that I will teach you guys in the course of this mentorship, you would improve. There is no way you will not improve using this strategy. This strategy is very effective. And me personally, I've been using this strategy for quite some time. Before this, I started using this strategy. I was trading structure, liquid. I was trading. Somebody is saying you can't see my face. Is it my face you want to see or my voice you want to hear? Listen, you don't need to see my face. So before I started trading this strategy, I was trading support and resistance, and it was not really giving me the win rate I needed. It was not giving me the win rate I needed. So I started trading this strategy. When I found out about this strategy, I mastered the strategy, and I've been using it, and it has really been effective, and it has made me profitable. And I believe it can also make you guys profitable. So the strategy I trade is structure, liquidity, points of interest. Structure, liquidity, points of interest. Structure, liquidity, points of interest. Now, this mentorship will be divided into 4 classes, which will be every Sunday until the month end. The strategy will be divided into 4 classes. The first class, which is today, we'll be talking just about structure. Everything you need to know about structure, how to mark out a proper structure, the rules behind marking out a proper structure. Then the next class, we'll be talking about liquidity, things you need to know about liquidity, how to spot out a very nice liquidity level and all that, everything you need to know about liquidity. The third class, we'll be talking about points of interest. After figuring out our structure and our liquidity, where do we enter our trade? That is a point of interest, points where we are interested in taking our setups. I'll teach you guys different points of interest I make use of. And the last class, we'll be talking about this last class. So many mentors, I keep telling people, so many mentors don't really teach about this last class, but I will be teaching it to you guys because I want you guys to know everything I know about this strategy, to be profitable using this strategy. So that last class, we'll be talking about directional bias. Directional bias is a very important part of this strategy as well. Things you need to know about directional bias, how to know if you should be buying or you should be selling. And at the end of that directional bias class, I will also be teaching you guys candle range theory, which is the CRT you guys know about. It's also a part of directional bias. But aside the CRT, there are so many other types of directional bias that I mainly use in the market, and I will be teaching you guys. So for today, I said we are going to be talking just about the structural part of this strategy. So every time you open your chart, you're always hearing about structure, structure, structure. What is this structure everybody's talking about? So the way I like doing my mentorship, I like breaking it down for you so that when you go to your charts later after the class, when you go to your chart, you will be able to mark out these things I show you guys and I explain to you guys. So if you open your charts, either you're a beginner or advanced trader or a pro, if you open your chart, you will notice that the market moves in 3 major directions. Either the market is moving on an uptrend, giving you a series of higher highs and higher lows, or the market is moving on a downtrend, giving you a series of lower highs and lower lows. So it's either the market is trending to the upside or the market is trending to the downside. The last type of movement is the consolidation. Now, most of you guys already know this uptrend, downtrend, but how do we apply this uptrend, downtrend, consolidation? How do we apply all these things to the market? How do we know how to trade these things, these trends? I'll be teaching you guys everything you need to know about uptrend. Now, if you just uptrend, downtrend. Now, if you just see this uptrend, downtrend, you'll just be saying, okay, it's a basic knowledge everybody are meant to know. Uptrend, market is moving, breaking the series of highs, moving to the upside. It's an uptrend. The market is breaking lows and is moving downwards. It's a downtrend. But how do you know how to? How do you know can if I show you these levels, can you mark them out properly? If I show you, if I open the chart and I tell you to analyze this particular place and mark out the trend, can you mark it out properly? Do you know the rules behind these things? I'll be teaching you guys these things in this structural class. Now, what is market structure as a whole? Market structure simply refers to the movement pattern of price, the movement pattern of price on the chart. That is what I just told you guys. The uptrend, either the market is what bullish, or the market is what bearish, or the market is ranging in sense of what consolidation. Now, this strategy we basically trade trending markets. Either we are buying or we are selling. I don't trade what consolidation. If I see that the market is consolidating in a certain period of time, I do not trade. I just wait for the market to give me what a good direction. Either the market breaks to the upside or the market breaks to the downside. Then I look for what my setup. Please mute your mic. Either the market breaks to the upside or market will break to the downside. Then I look for what my setup. Now we have two major type of market structure we look out for. We have what we call the market structure shift, and we have what we call the break of structure. Market structure shift, most of you might know it as change of character. They are all the same thing. Break of market structure shift, change of character, they are all the same thing. Now we refer to this market structure shift as what our MSS, and the break of structure as our what BOS. Now, what is this market structure shift? What is this MSS? What are the rules behind this MSS? How do I mark out these things what on the charts? Now let's imagine that, for instance, our market is bullish. The market is breaking highs and moving to what the upside. This market structure shift, the this market structure shift is simply what? Simply when your market shifts from a particular trend to the opposite direction. For instance, the market is bullish, the market is breaking a series of highs. Please mute your mic. For instance, your market is bullish, breaking a series of highs to the upside. Now, all of a sudden, market what starts to sell in the opposite direction. Instead of you to continue buying, it start giving you what sell setups. You will know that what a market structure shift has occurred. Now, let's use this for example. Now, if we open our chart and we see that what our market is bullish, pushing to the upside. Now, what do we expect that market will continue to do? We expect that the market will continue to what push to the upside. But all of a sudden, instead of market to reject back down and push to the upside, market just starts selling, breaking what the previous low. Market broke what the previous low and starts selling to the downside. You will know that what a market structure shift or a change of character has occurred. This level where the market broke this previous low and starts selling is what we refer to as what our market structure shift or our MSS. Now, it is very important we are able to identify these market structure shifts in the chart, because it helps us know whether we should continue buying or we should continue selling, or we help us know what to do in the market. Now, I will be using this as an example. Hold on, guys. So I'll be using this for an example. Now, when I came to the chart, what did I see? Why did I start looking for what? Why did I start looking for buys? When I came to the chart, I saw that this market was breaking the lows and it was pushing what to the downside. Now, if you look at this level, market broke down to this downside, breaking what past this low, pushed to the downside. It went back up for to give us what a new lower high and push to the downside, breaking what this low. That means what? That means the market is what on a downtrend. Now, why since the market was on a downtrend, why did I start looking for buys? Why did I take this buy setup? Now, if you zoom in and you look at the way the market was moving, you will see that market was giving us what a downtrend. It was on a downtrend like this, and it pushed to this downside. When market gave us this new high, can you guys see that new high? So when market gave us this new high, it pushed to the downside, which we expect because it's what a downtrend. We expect that the market will continue what to go into the downside. But all of a sudden, market pushed to the upside, breaking past our what recent high that was created, pushed to the upside, and it started what buying. So immediately I spot out this market structure shift. I now know that I can no longer be looking for sell setup. I now have to look for what buys. I can no longer be looking for sell setup. I now have to look for buys. So that was the reason why I started looking for buys, and market gave me a very nice buy setup, and I started looking for what buys. If market did not give me a very nice buy setup like this, if market did not give me a market structure shift, what would I do? I will simply join this trend and start looking for what more sell setups to the downside because a market structure shift has not been formed. But immediately market break past this high to the upside and shift from one trend to the other trend, I now know that what a market structure shift has been formed. Now, for a break of structure, which is the other type of the structure, break of structure simply means when market continues to break the previous high or the previous low in the same direction. Now, take note of this. The market structure shifts. Market simply broke from one trend to the opposite direction. For instance, market was buying. Market instead of market to continue in this same direction, it pushed to the downside and it continued what in this manner, in the opposite manner rather. Now we're saying for a break of structure simply means what that market continue breaking what our recent highs or our recent low. This is a recent high. Market break past that recent high in the same direction. Now you might be telling yourself that waiting this guy they teach. I understand, I know change of character, I know break of structure, but do you really know them? Now, structure, you guys should pay attention to this structural class because structure as a whole is the most important part of any strategy. Structure as a whole is the most important part of any strategy you are trading. Either you are trading support and resistance, MSNR, any strategy you are trading at all. It's either the market is buying or the market is selling. So if you don't understand structure, you can never understand what any strategy. Now, I asked you guys a question. Are you guys, do you, if I show you these levels, can you mark them out? Do you really understand this level? There are rules to marking out these things. There are rules to marking out these things. If you understand the rules and if you understand the concept of marking out these things, you will always get them on in the chart. Now, for the first one, we'll be starting with the market structure shift. What are the rules to marking out what my market structure shifts? There are rules to marking out this market structure shift, and I will give you guys three different rules to marking out your market structure shift. Once you follow these three rules, you will always get it right. As long as you always follow these three rules, you will always get it right, and you will always know either to be looking for buys or to start looking for what trades in the opposite direction. The first rule to marking out this market structure shift simply states that your market structure shift must have a structural sweep. Your market structure shift must have a structural sweep. Now, what do I mean by this structural sweep? I will explain. Now, your market was bullish, very much bullish, pushing to the upside. All right. All of a sudden, market gave us a new high like this. Okay, give us a new low. What do we expect? We expect that the market continues in that same direction, right? But market decide to push downwards like this to the opposite direction, indicating that this is our market structure shift, right? Now, our structural sweep is what simply the previous low market what took out before going in the opposite direction. The first rule to marking out your MSS is that what your MSS must have that sweep behind. If this sweep did not happen, If this sweep, if you don't see this sweep, it simply means that what, that your MSS is not valid. If you see that, if you don't see that sweep, it simply means that what, your MSS is not valid. Now, there are two scenarios that can happen. This is the first scenario. Now, let me mark out the second scenario for you. The second scenario is that you will get something like this, and you'll get something like this. Okay, let's say, okay, let's say something like this. Now, these are two different scenarios. These are what, two different scenarios. Now, this first one, you can see that the structural sweep was what's checked. The structural sweep was checked. This was where your structural sweep happened. Market took out the previous high, pushed to the downside, and what took out the low. Now, in this scenario, you can see that the structural sweep was not here. You cannot mark here as a market structure shift. That is not a market structure shift. Anytime you see something like this, simply know that what, that is not a market structure shift. The only place you can mark out here as a market structure shift is this level. This is the only place you can mark out as a market structure shift. Why? One, because there was a structural sweep behind first, and market also came back down to take out what, the previous low. So this is our structural sweep one. The market pushed back down to take out this previous low. So this is where you can even call your MSS, not this one above. This is not a market structure shift. Why? Because our first rule of marking out our MSS simply states that what, our MSS must have what, a structural sweep. So if I don't get this structural sweep, I cannot what, call here my MSS. If I don't get that structural sweep, I cannot call there what, my MSS. Now let me show you guys example of this structural sweep on chart. Now, if you come to BTC, this same level I used as an example. Now, if you see what happened, yeah, market was selling, right? And market created this low, pushed to the upside to give us this high, and pushed back downward. Now, when market pushed to the downside, you can see that it took out what, our previous low. This was our previous low market took out before pushing to the upside to take out the high, which is what, which is simply that diagram I just drew for you guys now. Market has to give you what, this structural sweep. This structural sweep is what, very important. Once I see this structural sweep and I see that, okay, I came to the chart and I simply saw that market took out what? Market took out the low first and it pushed to the upside to take out the high. Now I know that what, my market structure shift has happened. A valid market structure shift just happened at that level. Why did I call it my market structure shift? Why? Because it simply took out this low first before what, pushing to the upside to take out the high. That is the first rule of marking out what, your valid MSS. This setup, I was able to spot this setup, this buy setup, less than 3 minutes, or okay, let me not exaggerate. I think less than 5 minutes. Immediately I opened this chart, I saw this buy setup immediately. Immediately I opened this chart, I saw it immediately. Why? Because I understand the concept of these rules. These rules are very important. Very, very important. Now, the first rule simply states that what, our market structure, a valid market structure shift must have what, a structural sweep. This is a structural sweep. Can you guys see it? Structural sweep checked. That is the first rule. Now, the second rule of marking out your valid MSS, the second rule simply states that your valid MSS must close with what, a full body candle. Your valid MSS must close with a full body candle. Take note of these rules. Take note of these rules. The reason why I'm saying you guys should take note of these rules is because you can never get these rules somewhere else. You can never get these rules somewhere else, except it's somebody that I taught personally. You cannot get these rules somewhere else. Always take note of these rules because it will help you in your journey a lot. It will help you a lot. First rule, structural sweep checked. Second rule states that what, our valid MSS must close with what, a full body candle. Now let's come back to this level. Okay, I'm just going to take this back. Yeah. Now, okay. Let's go from our 2 hours. Let's analyze from our 2 hours. downward. Now on the 2 hours time frame, I can simply see that what I can simply see that my structural sweep was intact and what my market structure shift was intact. What is the next rule? The next rule states that my MSS must close with what a full body. Now let's refine it down from our 2 hours time frame down to our lower time frame. On the 2 hours time frame, immediately market took out this my structural sweep. Can you guys see the next candlestick that opened? The next candlestick pushed to take out that high with full momentum. With full momentum, indicating that what? Indicating that buyers are now active, indicating that buyers are now in the market. So we need to see that full momentum. We need to see that full momentum. That is why sometimes you guys might take a particular trade and you see that the trade might end up eating SL. Why? Because there was no full momentum at this particular level. Market did not take out to give you your MSS with full momentum. You might be seeing that the candle is giving you small breaks like this, small breaks like this before it take out your MSS, and you will still mark it that it's your MSS. No, it is wrong. You need to see that momentum. You need to see that what full body candle close. The market should not get to that your MSS, which is this your high, and close with a wick and reject back. It should not do that. It has to close with what? A full body candle. Once it closes with a full body candle, you will simply know that what that is an MSS. You simply know that it has aligned with what your first two rules. Your first rule, structural sweep. Your second rule, full body candle. I know why I'm singing it for you guys, because I want it to sink in. I wanted these rules to sink in because these rules will make you profitable. Once you keep on following these rules, you will see how your journey will change, guys. I'm very honest with you guys. Now, let's refine it down from our 2 hours time frame. From our 2 hours time frame, you can simply see that what the momentum was there. Market gave us the momentum and it closed what above our high with what a full body candle close, which is very good, which align with our rules. If you go down to my 1 hour time frame, you can also see that the market took out my high with a full body candle as well. This is my high, and you can see the way market close. Market close above my high with full body candle as well. So I need to see that full body candle. I need to see it. I need to know that the buyers are in the market. I need to know that the buyers are present in this market. Are you guys following? Do you guys understand? Now, I come to my 45 minutes. What am I still seeing on my 45 minutes? I can still simply see that the market closed above my high with a full body candle. That is how I keep on refining it downwards to see if it aligns with what my rules on all my time frame. I don't want to go to a different time frame, and I don't want to see that market close at that particular level with a week. I will just know that market structure shift is not strong. It's a risky trade. So now I come to my 15 minutes time frame. What can I see on my 15 minutes time frame? Now, beautiful. Now, on the 15 minutes time frame, you can see that the very candlestick that took out that market structure shift closed with a wick. But I still marked it out as a valid market structure shift. Why? Because the very next candlestick that followed it pushed with momentum, and that momentum closed above what my high. The very next candlestick that followed it pushed with momentum, and that momentum closed what above my high with what full body candle. So the second candlestick that closes above that high still matters. In this case, this first candlestick on the 15 minutes time frame closed with what a wick, and the very next candlestick pushed to the upside and closed with a body. Now you guys have seen that I've followed it from the 2 hours time frame down to my 15 minutes time frame, and it aligns with all my rules. It makes sense. So I can simply leave that level and mark it as what a valid market structure shift. Now you guys can see that what my two rules align. First rule, structural sweep checked. Second rule, full body candlestick. Markets must close above that your market structure shift higher with what a full body candlestick. So immediately I see these two things, I can simply know that what my market structure shift is what at least 80% ready. Now the third rule And final rule of marking out your valid market structure shift. Now, take note of this last rule. Take note of this last rule. This is where a lot of traders get it wrong. This is where a lot of traders what get it wrong. After your market structure shift, a break of structure must form. This is your third rule. Now, I will say, most of you that are trading this strategy, I will see your charts and you will have something like this. You will have your market structure sheet, and you will just mark out. You just mark out. Okay, let's say somewhere like here. Okay, let's say somewhere like here as a point of interest. Now, you will use something like this for your trade. You will use something like this for your trade. And you will mark out here for as your inducement or your liquidity. You mark out one small level like this at your liquidity, and you will be planning to take buys. You'll be planning to take buys from somewhere here. Now, if this your trade fails, I would not be surprised. If this your trade fails, I will not be surprised. Why? Because you're trying to take a buy setup, right? But market has not showed you that buyers are in the market. How do market show you that buyers are in the market? When market continues giving you what? A break of structure. Once market continue giving you a break of structure in a particular direction, it simply tells you that okay, buyers are now in the market, buyers now have strength, they are now breaking new highs or they are now breaking new lows. It will simply tell you that what buyers are now in the market or sellers are now in the market. So it is very important to always have that break of structure after your market structure shift or after your break of structure entry. Now, let me explain with diagram what I mean. Let me explain in diagram, then we'll go to the chart and we will look at different setups I've taken so far and we will check if I follow these rules. Now, the first, okay, let me use this. Okay, okay, let me use this. Hold on. Okay, let me use this. Market push to the upside, like this, giving you your market structure shift or your break of structure. Let's now assume this is my point of interest. Now, our third rule simply states that we need a break of structure after our market structure shift. So if this is my market structure shift, I need a break of structure following it, a break of structure like this. Okay, I think this is okay. Hold on. I need a break of structure following it like this. This break of structure I'm waiting for, it simply tells me that okay, buyers are now in the market. Buyers can now push in market. You can now, it is safe for you to now take your what? Your buys. So that break of structure is where we serve as what? As my liquidity. So many forex mentors don't know this thing. So many they don't know this break of structure rule, and it is very important. If you come to my chart and you see the trades I take, if you see the trades I take, you will see that what I always have a break of structure. Structure happened inside. Immediately after structure happened inside, you can see that a break of structure formed as well. This one I'm even using as example. Structure happened here. Immediately structure happened. The next candlestick that follow, you can simply see what the break of structure. Always wait for what a break of structure. That break of structure simply tells me that what buyers are now in this market or sellers are now in this market. Are you guys following? Do you guys understand? Are you guys getting what I'm teaching? Beautiful, beautiful. Now it is very important you get what these break of structure because what it simply tells you that what okay buyers are now in the market or what sellers are now in the market. Now let's continue. Hold on, give me a minute, guys. Okay, let's continue, guys. So I told you guys that the third rule states that what we need that break of structure. It is very important. Now let's refine this particular level to my lower time frame. Let's see if I follow all the rules to take this buy. How did I get this very clean buy? Let's see if I follow the rules. So for my 2 hours time frame, I told you guys that I didn't spend up to 5 minutes when I'm getting this setup. My 2 hours time frame, I simply spotted out what my market structure shifts. Now my third rule of my market structure shift states that was I must have a break of structure. Now if you look at this 2 hours time frame, you can even see a break of structure from the 2 hours. You can simply see a break of structure from the 2 hours. But let's still refine it. Let's still refine it lower to see if on the lower time frame market aligns with these rules. Now, 1 hour, is my break of structure still there? Yes, it is. Checked. My market structure shift checked. My structural sweep checked. Now let's still refine lower. Let's refine lower. 30 minutes. Is everything checked? Yes, everything is checked. Now let's go to my 5 minutes time frame. Now let me show you guys something very interesting. Immediately I came down to the 5 minutes time frame. You can simply see that my structural sweep was checked. First rule checked. My second rule, it states that what my market structure shift must close with a full body candlestick, checked as well. Now, if you check my 5 minutes time frame, you can see that immediately my market structure shift closed. You can see that what my market gave me what a break of structure following it. On the 5 minutes time frame, you can simply see that what market gave me a break of structure following it. This break of structure is what I simply make use as my what? As my liquidity. Does it make sense? This break of structure is what I simply use as my what? As my liquidity. So I can now even delete this other line here because what? I've gotten my liquidity below. Once you get these things and you are able to spot out these things in the chart, once you are able to spot out these things in the chart and you are able to combine these things together, you will get what? An A plus setup. Always combine your rules. Rules are very important. Rules are the most important part of any strategy. The most important part of trading is rules. If you don't follow these rules, you will never be profitable. Not be said this for you. It's just normal logic. Now let us see what happened again. Immediately markets smashed our take profit. I think I took another buy. Yeah, I took another buys. Immediately markets smashed our take profit. What did I look out for again? The same thing I just taught you guys. But in this scenario, the difference is that this first one was what a market structure shift entry. But now market is in a particular trend now. What will I kept on looking for what buys. Why am I looking for buys? Because the market was selling. Gave me market structure shift aligned with all my rules. It started buying. I can no longer be looking for sales. I have to now look for what buys. It is as easy as that. I have to now keep looking for what buys. Now, if you are taking a market structure shift entry or you are taking a break of structure entry, the rules still align. Now, you might not get a structural sweep. Take note of this. You might not get what a structural sweep for a break or structure entry. What do I mean by a break or structure entry? It's in the market is either you are taking a market structure shift entry or you are taking what a break or structure entry. Now, if your initial market structure shifts point of interest, okay, let me draw this again for you guys. Hold on. Now, for instance, I come to my chart and I saw that what my market structure shift like this. Now, this is my point of interest. This is my liquidity. Remember, I told you guys that your break of structure always serve as your water liquidity. Please mute your mic, guys. Mute your mic.
And the question now is,
So I told you guys that what your break of structure always serve as your what? Your liquidity. Now, for instance, I opened my chart and I saw that okay, this is my break of structure entry, my point break of my market structure shift entry, my market structure shift point of interest has been mitigated. Market has already tapped into my market structure point of interest. So what do I simply need to do? I simply need to keep looking forward, trades in that same direction because the market has given me a market structure shift and it has given me a market structure shift entry model, and the market is already buying. So I need to keep on looking for trade in that direction until I get another market structure shift, and that is when I will start looking for trade what in the opposite direction. So for now, initially we had a market structure shift to the upside, so we continue looking for what buy setup. Now immediately market smashed our buy take profit, which is somewhere around here. It gave us a new break of structure. This is simply what a break of structure. So how do you capitalize on that? How do you take a break of structure entry? You simply make use of what? Look for another break of structure. Following that, your first break of structure to serve as your liquidity. Look for your points of interest, mark it out, wait for the market to come back to that point of interest, and you continue looking for your trade. This second break of structure will simply serve as your what? As your liquidity. Can you guys see how clear it is? Now, if you even look at this diagram I marked out, you can even see that this level also had what? A structural sweep. So you just need to keep following these rules over and over and over and over and over. You simply need to keep following these rules over and over. And that is what I simply did here. Immediately market smashed my take profit. I found out that what a break of structure was created here. Market created a break of structure. So now what do I need to wait for after that break of structure? I need to wait for another break of structure to serve as my what? As my liquidity. Can you guys see the market gave me a very nice break of structure? So now I've gotten a first break of structure. I've gotten what? A second break of structure to serve as my liquidity for the first. So how did I get my entry? I simply used my order block point of interest and I waited for market to come back down. Immediately market came back down, it tapped into my order block. It continued buying. It continued buying. I know my rules and I follow these rules. I know my rules and I follow these rules. Once you know your rules and you follow your rules, you will keep having what? A plus setup at all time. Now let's pause. Let's pause around somewhere here. I want to see this particular buys I took. This third buys. I want to see this third buys I took. Which time frame did I take this buy from? Don't worry, when we're talking about points of interest, you guys will know the reason why I take some particular level as my entry. I'll teach you guys how I take some particular level as my entry. Now, if you even look at the third buys as well, if you look at the third buys, you can see that this was my first break. Immediately my first break was formed. You see that market gave me a new break of structure. That break of structure was what I used as my what? As my liquidity. I picked my point of interest. Market came back, tapped into my point of interest, continued buying. It is not hard. I keep on following these rules I'm giving to you guys over and over and over. I'm not be say I they do magic for the charts. It is the rules. How did I still take this next entry? How did I take this next entry? Structure. A new structure was formed to the upside. A new structure was formed. Immediately this new structure formed, what do I wait for next? Another break of structure that will serve as liquidity for this level. Now, what did market do? Market gave me a break of structure. Immediately I get this break of structure, I simply take what? My next buy entries. That is how I keep following these rules over and over and over until market gets to my final destination. So it is very, very, very easy if you keep following these rules. It is easy. It is easy. Oh, let me look for more examples for you guys. Let me look for more examples for you guys. It's easy, guys. It's really not hard. It's really, really, really not hard. It's easy, guys. Take a look at it again. Take a look at it again. So the market was very much bullish, breaking what? Breaking previous highs, pushing to the upside, giving us what? Series of higher highs, higher lows. All of a sudden, what happened? Market gave us a new high. Instead of it to continue in that direction, it pushed downwards, breaking what? Our previous lows. Immediately, market broke past our previous low. It gave us what? A break of structure as well. Break of structure, it is very important. It is very, very important. Now let's map out the entry together. Structural sweep, which is the first rule, checked. Second rule states that what our markets must close below our low with what a full body candle. Full body candle, checked. Third rule states that what we must have what a break of structure following it. Break of structure, checked. Break of structure is simply where I used as my liquidity. Break of structure was where I used as my what? As my liquidity. Market came, tap into my point of interest, push to the downside. It is easy. Forex is very easy. You need to know your what? Your rules. Are you guys following? Do you guys have any question? Do you guys have any questions so far? Do you guys have any questions so far?
I have a question to ask you.
Okay.
Please go back to your chart.
Okay.
Okay. For example, if price gives a break of structure, like take the highs and your first pullback, why don't you use what do you call it, your breaker block for entry? If you get this break of structure as your inducement, why don't you use the closest point, which is like a breaker block for your entry?
When we get to points of interest, we will explain those ones. We are talking about structure in this class.
Okay,
Do you
thank you.
understand? Yeah.
Yes, yes.
Any other question?
Yes, yes. Wait, the sweep, must it do with a candle or just a wick?
That's
The
the question
liquidity
I've been
sweep.
waiting for. That's the question I was waiting for. Very nice question. Now, the idea of a sweep. The idea of a sweep, if you've heard of sweep in Forex, the idea of a sweep is actually weak. It's actually weak. So once market take out a particular level with a wick, you can call it a sweep. But when it comes to a structural sweep, it can be a wick on most time frames, but it can also be what a candlestick on a particular time frame. Now, if you go back to this level, if you go back to this level, hold on, guys. Now, if you go back to that BTC buys, if you go back to that BTC buy, let's go to that BTC buys together. Was it the 2 hours time frame? Okay. So I think it was okay. These BTC buys. So if you check from the 2 hours time frame, you can see that what market gave us what that structural sweep with a week, which actually follows the name sweep. It took out that previous low with what a week. If you continue scaling down to my lower time frame, you will see that the market kept on giving us what weeks. But when I come down to my 5 minutes time frame, let's go to the 5 minutes time frame. When I come down to my 5 minutes time frame, you will see that the market closed with a body. It doesn't matter weak or body. Or the idea is that market has to give you that structural sweep before pushing to the upside to take out what your previous highs. You need to see what that structural sweep before market push to the upside to take out what your previous highs. Do you understand now? Do you understand? Any other question? Any other question?
Sorry, sir.
Yeah.
Yeah, sir. So sir, about the liquidity, I thought any force pullback is the liquidity. Is it the most for it to be a book of structure?
Now I'm telling you now that it has to be what a break of structure. Once you see that break of structure, it gives you at least 90% assurance that you have an A plus setup. Now I'm not telling you that most times the market might choose to just give you a first pullback and just tap into your point of interest and push. But you need that break of structure. That break of structure, I don't know about other people, but me personally, I need that break of structure. That break of structure simply tells me that what this is an A plus setup and this market is definitely what going to play out. This market is definitely going to play out. Now, if you check my charts, hold on. If you check my charts, if you see any setup I'm taking, any at all, any setup I'm taking, let's start from this last setup. Let's start from this last sales I took. Any setup I'm taking, I always wait for what? That break or structure. Now, take a look at the 5 minutes of these BTC sales. Let's take a look at it. Let's analyze this BTC sales together. Now let's analyze this BTC sales together. So what did I see on this level that I wanted to that made me sell BTC? Now on this level, I could see that what market was pushing to the upside on the 5 minutes time frame. Market was giving us series of highs and low. The market gave us this low, then push to the upside. Immediately market push to the upside. Since it's an uptrend, what do we expect? We expect market to continue in that trend, right? But the market pushed down to take out what this previous low and close with what a full body candle. Now, you might be asking, since I said a break of structure, I always need a break of structure to get my liquidity. Why did I mark this single candlestick as my liquidity? Now, let's scale down to our lower time frame. I always advise all my students, always make use of all your time frame. Exhaust your time frames. Me personally, I don't focus on any specific time frame. If I go to my yearly time frame, you will see that I have an analysis on my yearly time frame. If I go to my 6 months time frame, you will see that I have analysis on my 6 months time frame. This is my yearly time frame. I already have an analysis on my yearly time frame, and I already have a level I'm trying to look forward to more buys. Any year, anytime market gets to this particular level, I already have a particular level I'm looking for what buys. If you go to my monthly time frame, you can see that I've analyzed my monthly time frame down. This is my monthly first break. Market gave me my monthly second break, indicating that whether my monthly second break is my what liquidity. You can see I already marked out my liquidity. You can also see I've even marked out my structural sweep. Any year, any month, anytime market comes to this level, I will be taking massive buys. I don't focus on any particular time frame. So I make sure I do what exhaust all my time frame, and I will keep on telling all my students make use of what all your time frame. Now let's go back to that BTC sell setup. How I was able to get what that sell setup. How was I able to get that sell setup? Hold on, let me reset this. Beautiful. Now, immediately I saw my 5 minutes market structure shift. What did I do? I need liquidity for this level. I can't just jump in without liquidity. Now let's go to the 3 minutes time frame. On the 5 minutes time frame, first of all, you can see the level I marked out as my liquidity. You guys can see it is this level. But now let's scale down to our lower time frame. Let's scale down to our lower time frame. Immediately you come to your 3 minutes time frame, you can see that what market gave a very nice breakout block level here, and it also gave what a very nice. Okay, let's use this as our break of structure. There was a 3 minutes break of structure following this level, but if you want to use a closer liquidity, you can definitely see this closer liquidity protecting this level. Now let's still go down to our 1 minute time frame. Beautiful. So this is our 1 minute time frame. You can see that what market after market gave us at that our initial structure, which is this level, kept giving us what break of structures to the downside. So I simply was just picked the first level, which is the first break here, and I picked it as my liquidity. So me personally, I always wait for that break of structure. That is what I love using as my own liquidity. I love using it as my own liquidity. I don't know for other people. Other people will tell you to just mark out first pullback as liquidity. But me, I love seeing a break of structure. Now, as you guys can see, I didn't enter the sales from that particular first level. Let's see what the market did. Let's see what happened in the market. So I marked out my oh, this shit is too fast. Hold on. So when I marked out my point of interest, which was my breaker block on my lower time frame, you can see the market tapped into the breaker block, and I still did not take my entry immediately. Let's go to the 1 minute time frame. Let's see what market did on the 1 minute time frame, and let us see why I use this particular level as my entry. Now let me reduce this speed. Hold on. Okay. Beautiful. Now, can you see what happened on the 1 minute time frame? On the 1 minute time frame, you can simply see that what market gave me what a structural sweep. First of all, structural sweep checked. Same thing, still following these same rules I gave to you guys. Structural sweep checked. After your structural sweep, what was the next rule? Full body momentum. This full body candle, it is very important because it is telling me that what sellers are now in the market. It is now safe for you to what take your sales. Now, immediately after my full body, what can you see here? What is this? A break of structure. I love seeing this break of structure because it gives me more confidence in this market and tells me that what okay, sellers are simply what now in the market. It is now safe for you to what take your sales. So some people will tell you that just mark our first pullback. I love seeing my break of structure. Do you understand? And as you can see, the market came back, tapped into my level, and it dropped immediately. It is not magic, it is just knowledge. It is just what knowledge. So does that answer your question? Any other question? Any other question?
Sorry. Boss,
Yeah.
when does structure become invalid?
When the structure
When do I
become
know? Yes, when do I know that this structure is no more valid?
now when it
And what
comes to and what
and
is
what
what
time what time frame should I trust note for structure?
I just told you guys that I don't make use of any specific time frame. Any time frame I see my structure, I mark it out. But then again, always make use of your higher time frame. Always look at what your higher time frame is doing. I need that higher time frame to tell me that okay, this market is going to be selling for a long time, or this market is going to be buying for a long time. That higher time frame will also tell me that you cannot be buying from this particular level, or you cannot be selling from this particular level. Do you understand? So always make use of your higher time frame. Now let's go to let me map out something for you guys. Let me even show you guys these small sales that happen and these small buys that happened in this consolidation, but I did not take the trade. Now let me just delete this. Now, if you come to your 3 minutes time frame, if you come to your 3 minutes time frame, you can see that what a structure happened inside here. which is like a double breakout structure, happened inside here. Immediately that structure happened, you can see that what market gave you another breakout structure, which serve as your what as my liquidity, and I simply just marked it out. I marked out the structure, the entry, but I didn't take the entry personally. And if I had taken the entry, it would have looked something like this. Hold on. It would have looked something like this. My entry just simply here. SL few pips below, and my target would just be somewhere above where previous liquidity, somewhere here. Can you see that's 10 RR? Always follow these rules. If you follow these rules, you will see that it works a lot. Now, for your first question you ask, when do we know when our structure is invalid? Now, I'm going to be marking out two scenarios for you guys. First of all, we have our market structure shifts like this, and we have the first scenario. This is the first scenario, take note. And we have our liquidity like this. Let's now assume this is our point of interest. Now, the market keeps on giving us new breakout structures to the upside. But take note, our initial point of interest for our market structure shift, which is the origin, the origin point of interest has not been mitigated yet. Always take note that if the entry point of interest, which is the origin market structure shift, which is this origin market structure shift, if the point of interest for this origin has not been mitigated yet, the market is still likely to come back. It is just creating liquidity. It is still likely to come back to that's your origin. Immediately it comes back for your origin, it can simply start buying, push to the upside, which is what simply happened in this area. Hold on, let me show you guys. Which is simply what happened in where? Okay, let me go to text. Which is simply what happened in this area. As you can see, this was my origin point of interest, everything, and I had my breakout structure protecting this, my origin point of interest. But my origin point of interest was not mitigated yet. But the market kept on giving new breakout structures to the upside. So would I say because the market is giving me new breakout structures to the upside, I will be using this breakout structure as liquidity for here, and I will be taking my buys from here? I could chop SL. Why? Because I cannot be buying from liquidity. I cannot be buying for liquidity. I need the market to clear out all this liquidity and tap into that origin point of interest. Why? Because my origin point of interest was not mitigated. My origin point of interest was not mitigated. Now, the second scenario, this is how the second scenario is. Now, for the second scenario, I will mark out now let's assume that, let me delete this. Now, for our second scenario, let's assume this was our market structure shift, and the market gave us as our entry, which is our point of interest, and the market decides to give us something like this, a pullback like this. And market taps into these origin points of interest. If market tap into these origin points of interest and it starts buying, you no longer have business with this origin. All you have to do is now keep looking for more new structures, newer structures. That is why you see that when I post some trades in the group, if they ask me why are you taking buys from this level, I will tell you that it is recent structure. This is the recent structure I'm talking about. Market simply tapped into my origin point of interest. I have no business with this level again. I will simply wait for a new breakout structure, another breakout structure to serve as my liquidity. I will mark out my point of interest. Anytime market comes back to my point of interest here, we continue buying. Do you guys understand? So once you see that your initial origin point of interest has been mitigated, you no longer have business with that level. Look for your recent structure. Once you get a recent structure, continue looking for trade in that particular direction. Do you guys have any other question? Do you guys have any other question? Okay, if you guys don't have any other question, we'll be talking about the last topic is still under structure. I want to talk about before we round up the class. Now we'll be talking about what we call external. Okay. So we'll be talking about what we call external and internal structure. External and what internal structure. Now, this external and internal structure is a very, very should I call it very important part of trading as well. So it's a very important part of trading as well because I love giving you guys the ideas of this thing. I love giving you guys what the ideas of this thing. Now, if I go to my yearly time frame on BTC, if I go to my 12 months time frame on BTC, let's go to the 12 months time frame. Now, you guys should take note that on this 12 months candlestick, which is the yearly candlestick, each candlestick here is 1 year of your life, 1 year of our trading, 1 year of anything we're doing. Each candlestick here on the yearly time frame is 1 year. Which means that what? Which means that if I go down to my 6 months time frame, each candlestick here, which candlestick here will be represented with what? 2 candlestick on the 6 months time frame. 2 candlestick on the 6 months time frame. Just the same way, if you scale down to your monthly time frame, 1 candlestick here will appear as what? 12 candlesticks on your monthly time frame. Do you guys understand? So now, the lower you get, those lower time frames are what your internal structures for your higher time frame. Those lower time frame are what simply your internal structure for your what? For your higher time frame. So now, how do I use this idea? How do I add this idea to trading? How do I add this idea to my current times in trading? Now let's go to okay, enough of BTC. Let's go to gold. Enough of BTC. Let's go to gold. So there was a sell setup I took on gold. I like deleting it because of the long two is very, very big. Hold on, let me mark it out again. So I like deleting. Okay, this is it. If you guys can see it, this was a sell setup I took on gold, and I will explain. I want to use this sell setup to show you guys another concept of external and internal structure. So where was that my target? Okay, beautiful. Yeah. Now, beautiful. Now, we already understand that what the markets move in a particular trend. We understand that the market moves in trend. Either the market is bullish or the market is bearish. If the market give us an uptrend, we'll be waiting for market to be taking out what new highs. If market is moving on an uptrend, we'll be waiting for market to take out what new highs. But based on our higher time frame, if we have this particular trend, we can't just jump into these levels, and we can't just be using our higher time frame. Okay, we'll just say on our higher time frame, if market push to the downside, I will just jump in buys, and my targets will be this high. We can't just jump into trades with our higher time frame. That is why we came up with the concept of what external and internal structure. The idea of this internal and external structure is that on your higher time frame, if you are on an uptrend like this, if market is giving you an uptrend like this, okay, let's assume this is an uptrend, and let's assume market gives us a new low. So from your higher time frame, once you see that your market is on an uptrend, immediately you take your buys like this. Where should be your next target? Your next target should be what? Your recent high. Abi, because market is on an uptrend, we can keep on looking for trades, and our exit should be what the recent high market gives to us. Our exit should be here. We exit our trade, wait for market to give us a new high, reject back, we take another buy. Where should be our next target? Our next target should be what? The recent highs. So from our higher time frame, the concept is that we keep on looking for buys to take out what the previous high market created. Externally, on the higher time frame, we've gotten our structure, but how do we take our entry? How do we take our entry with that external structure in mind? We need to make use of what's the internal structure. The internal structure is that immediately you have your buyers, immediately you know that okay, market has to take out what recent highs created. Okay, let me explain. Let me mark it out down. So as I'm explaining, it makes sense. Now we already have the idea that market needs to buy to take out what this external high, which is this high. But can we just jump into buys like that? No, we need our internal structure. So what do we do and how do we get this internal structure? You simply scale down to your lower time frame. Internal structures that you can get your internal structures from your 1 hour time frame downwards, your external structure from your 4 hours time frame upwards to your monthly time frame. All those things happen on your higher time frame are simply your external structure. But if I want to take my entries, I will scale down to my 30 minutes, 15 minutes, 5 minutes, 3 minutes, or my 1 minute time frame. Now let me show you guys what I mean by everything I just explained. Now if you come to your chart now, if you come back to your chart, you can simply see that I was buying gold massively. I was buying gold. Why was I buying gold massively this period? It is because of what my concept of this external and internal structure. Now, where is my external and internal structure? Now, I will mark it out for you guys. On my 4 hours time frame, you can see that gold has been bullish. Gold has been bullish. Now, let's just mark this out as a first push. Market push back down. So what should market do immediately market gets to this particular level? Market should start buying, right, to take out what the previous high that was created, external structure. So market should keep on buying to take out what our external high. But how do I take my entry? How do I take my entry? I already know from my higher time frame that what my externally market needs to take out what this previous high, because the market from the higher time frame is very much bullish and it has to buy to take out what the previous high. So how do I take my entry? I already have my external structure now. I need my internal. So my internal, I simply scale down to my lower time frame. So let's just scale down to like our 1 hour time frame. Let's simply scale down to like our 1 hour time frame. So on my 1 hour time frame, what do I need to do? I need to start looking for what's new entries. I need to start looking for new entries. How do I get my new entry? With the idea of the things I just taught you guys. Structure. How did I get this first entry? I simply waited for market to take out what my structural sweep, checked. Immediately I saw my structural sweep, market pushed to the upside to take out what my previous high. Previous high closed with full body candle. Immediately previous high closed with full body candle. A break of structure happened following it. After that break of structure happened, that break of structure was where I used as my liquidity. But you guys cannot get the picture clearer here because I got this from what a very low time frame. Now, okay, let me even explain it with this 1 hour for you guys. On this 1 hour, let me just take the charts back to this level. Let me just take the charts back to this level. Now, on my 1 hour time frame, my 1 hour time frame will serve as my external structure here. Because I think for this structure, I still refined lower. But for my 1 hour time frame, my 1 hour time frame is simply telling me that what my market structure shift happened here and my break of structure happened here, indicating that this is my liquidity and my setup should be somewhere around here, right? Now I still scale down to my lower time frame. Remember, I told you guys that your internal structures are those ones that happen what on my lower time frame. Now, what am I seeing on my lower time frame? When I came down to my lower time frame is simply telling me that Osama, this was not where your market structure shift happened. Even though you are seeing it externally that this is where your market structure shift happened, you should scale down to your lower time frame. Always make use of your lower time frame. My lower time frame will give me a more precise entry. My lower time frame is now telling me that what this is where my structural sweep happened. And my lower time frame is now telling me that what this is where my market structure shifts happened. And my lower time frame is now telling me that this level is serving as my what as my breakout structure, and this is my liquidity, and this is going to be my what as my liquidity. So now my higher time frame, which was my 1 hour time frame, which is my external time frame, is telling me that what my MSS happened here and my BOS happened here. Now, people that don't have the idea of external and internal structure, what would they do? What would they do? They will simply just mark out this 1 hour market structure shift and mark out this 1 hour breakout structure and call it their inducement level. And you will see that they are set up, they will mark out something like this and mark out every level like this, waiting to look for their entries like this, which is not right. You need those internal structure. You need to scale down to a lower time frame and still look inside to see what the market did. So when I scale down to my lower time frame, I simply saw that what my market structure shift still happened internally inside there. So I no longer need those external. I simply just would use my internal structure. Now take note of this. Your internal structure is what you use as your what as your entry. You use your internal structure or your internal time frames for your entry. Your external is just to what your to know your bias. Your external is just to what know your bias, and your internal will serve as your what as your entry. So what did I do with that idea? I kept on looking for what first break, second break, inducement level, point of interest, mark it out. I continue capitalizing on that idea of what of my internal and external structure. I continued using my internal structure to look for my buy. But don't forget that on my higher time frame, which is my external time frame on my 4 hours, where should be my overall target? This external high. And as you guys can see, all my buy setups I took, my target was what? My external high. Do you guys understand that? Do you guys understand that it is very clear and it is very easy? It is very clear and it is very easy. Do you guys understand that? Do you guys understand that? Very good, very good. So do you guys have any question? Do you guys have any question? If you have a question, ask, guys. If you have a
Osama, I
question,
got a
ask.
question.
Hi, boss. Hello, boss. Please, how do I differentiate between internal and external structure?
That is what I told you guys. I told you guys that what your external structures are the structures that happen on your higher time frame. Now, you guys should make use of this tool. I'm going to be showing you this tool. Always make use of this tool. It will help you. Here is okay, beautiful. This tool, part two. Part two. This tool is very important. This is my tool here. I simply added it to my favorites. Now, I just come to my chart and I'm seeing the way the market is moving. What do? I simply take my part two. I put it like this. Okay, the market has been buying and the market gave me a new high like this. It pushed back down for exhaustion. What am I expecting is I'm expecting the market to push. Since it's an uptrend, I expect the market to push now to take out what the previous high that was created. I've gotten my external structure. My external structure is telling me that the market has to buy to take out what my previous high, which was created. So what do? I simply scale down to my lower time frame and look for what my entries. How do I get my entries? Using the same things I just taught you guys. Structure, liquidity, point of interest. First break, second break as liquidity. Mark out your point of interest. Immediately market tap into your point of interest. It pushes to the upside. Now, the way you get your entries are those internal structures you are making use of. Those internal structures you are making use of are simply your what you use them for your entry. While your external is simply telling us to what keep buying until market takes out that high. Do you understand? Do you understand? Do you guys understand?
Yes, sir. Yes.
Beautiful. Any other question, guys?
Yes, Osama.
Yeah.
What if market, the first structural shift, market doesn't come back to that one, but keeps giving you a valid setup, you know?
Now, the thing is that always have it in mind that anytime the market chooses to come back to that particular market structure shift, it will still hold. As long as your market structure shift point of interest has not been mitigated, anytime the market come back to that level, it will what hold. But if the market keeps on giving you new entries, simply take your new entries, but always have it in mind that this market will still turn back at any time to clear all this liquidity. Do you understand? So if the market keeps giving you what a new entry, you can take your new entry. But have
Okay.
it in mind that anytime the market reverse, it might always come back down for your what your original entry. As long as that your origin points of interest has not been mitigated, it is likely to what come back.
So what you're trying to say is that there's no point of invalid setup whereby, let's say, it doesn't come back to the market structural shift and it gets to hit or create a new high in the external range and keeps giving you the setup, new setup, to create more new highs in the external range. Is
Now
the MSS not going to be valid? Is it still going to be valid,
now if
or
now
is there no point
hold
where you
on,
can say,
let me
okay,
explain
okay,
with this
all right,
level. Now, when we're talking about external and internal structure, I taught you guys about this. Now, this is my final target. This is my final target, and this is where I want to leave the market based on my external structure, right? Now,
mm-hmm.
my internal structure gave me a valid market structure shift entry down here, but the valid market structure shift entry was not tapped into, and it continues giving me new entries. I simply just keep on taking those my new entries, and where should be my target? My target should simply be at the recent highs. I simply keep living at the recent high until I got to my final external target. Immediately I got to this my final target, external target, market pushed up and started giving me continuation. There is no need for me to be waiting for this MSS again. Why? Because the first level I want to leave has already been smashed. Do you understand? There is no point for me waiting for my MSS again at the downside. Why? Because my target has already been smashed. So I just keep on using the recent structure the market give to me, and I keep on looking for trades. Do you understand?
Yes, thank you.
Beautiful. So, any other question, guys?
Okay, yeah, one question. At this lower high, where you took this first trade, this lower high, the
Yeah.
buy setup.
Yes.
Yeah, was there a like market structure shift there, then adjustment and everything that
Now,
made you confirm?
this first buys, I think this setup has been long. How did I take this first buys? This first buys, the reason why I took this first buys, okay, beautiful. I see you have the marking here. The reason why I took this first buy was because of this level. If you can see how accurate it is, I took this first buy because of this other block level. This first buy was kind of like a break of structure entry model. So market gave me my break of structure, and it also gave me another break of structure that served as liquidity. I used this other block to take my first buys. Now, if you see where I target for my first buys, I didn't target this overall high for my first buys because I did not expect that the market was going to get to that high. As you can see, I planned on taking what sell setup from this level. I planned on taking these buys to this inducement level, and I planned on using a sell setup here to continue selling. But market left me a 4 hours order block, which indicates that this sell setup would not go far, and this market will continue to buy until this double top liquidity will be taken out. So that was why I did not target the overall for this first buy. I simply target here, and I left the market. So immediately market tapped into this 4 hours order block. I kept on looking for what buys to the upside until market got to my final target. Do you understand?
Yes, yes, yes. Thank you.
So any other question, guys? Any other question, guys? I need you guys ask me questions. Ask me questions. I need this thing to sink in because it
So,
is very important.
Osama,
Yeah,
so based on this sell you wanted to sell from, but you noticed that the market gave you a 4 hour demand, I said that buy it
yeah.
from there. How did you know that it wasn't going to sell any further to take out that
And
low?
beautiful. Now, the reason why I knew this market was no longer going to sell was because this level now showed me that what buyers are now in the market. Buyers are in the market. If you see the way the market started to move, market simply took out what this previous this high here, which I wanted to make use as my inducement. And if you see the way the market started to move, the market started giving me series of highs and lows, series of highs and lows. So immediately market got to this my entry model, and this my sell entry here, and it pushed to the downside. I simply was marked out that 4 hours order block, and as you can see, I did not jump in from the 4 hours order block. I wanted to see the reaction, and what the market do. Market tap into the 4 hours order block, and it started to push. So immediately I got my confirmation for my buy. That was when I started buying. I didn't just jump in because I wanted to see if this sell is going to push the market down or if these markets will continue buying. So immediately market tap into the 4 hours order block. As you guys can see, I didn't just jump in. Market gave me a confirmation before I started to sell, before I started to take my buys. Do you understand? So that is how you get an entry. If you get a particular zone and you mark out that particular zone and you see that okay, I'm not so sure this particular zone will hold. Always wait for what your confirmation. What is the confirmation I make use of? This same thing I teach you guys: structure, liquidity, point of interest. Structure, liquidity, point of interest. Any other question, guys? Ask me question. Ask me question, guys. Ask me.
One more question.
Yeah.
Based on our former mentors, they will tell you to always buy or sell from the first pullback. So okay, you've removed the chart. Could you go back to the chart, please?
Okay. Yeah.
So when market took that sell that you wanted to sell from, there was a break of structure there. Then the pullback, you didn't come down to like 50% of the retracement. You started selling from there, almost close to the pullback. Why did you make that decision?
Are you talking about this?
Yeah, the high that you took out, you wanted to sell from this, yeah, that sell, but now it took out the sell, the high of that sell,
Okay.
exactly. Then it pulled back. So it didn't wait for market to come down to 50% of that external range, that long push. You just started selling from there, in the immediate pullback.
Hold on. Let me get what you are talking about. Hold on. Let's go back. Let's go back to this particular level and let's do it together. So you said when market got to this level, I wanted to sell from.
Exactly, yes. And I
So
noticed there was a first pullback that you marked out as liquidity to sell from. But market
okay.
disrespected that place by breaking that uh, point, that high. Then the
So
first
this
pullback,
this is this the liquidity you are talking about?
that's the liquidity you wanted to sell from, but it seems market disrespected it, or maybe you saw it on time based on this buy that you saw from the 4 hour demand.
Mm-hmm.
So market now took out that high and gave a first pullback. The chart, you already removed that candles from the chart.
Okay.
Market
Let's play it. Let's play it. I want to get what you are talking about very well. Okay. This
so
level, right?
yeah, keep going until the market takes out that sell. So this first pullback now, hold on, this first pullback after market took out this BOS, the first pullback, then
Mm-hmm.
it kept going. Market now took out the major sell position, major sell point of interest wanted to sell from.
Yes.
The
Okay.
first pullback, it didn't wait for market to come down again to take
Mm-hmm.
out that first pullback after a break of structure from the buy. It
Okay.
just immediately started selling, buying from there. Like it didn't even wait for market to come down to like 50% to the buy
Yeah.
zone. So what informed you to buy from there? Why did you
That
decide
is
to
why
buy from
I
them?
keep telling you guys about recent structure. Now, if I took this, if I don't have idea of this external high, okay, let's assume that I don't have idea of this external high, and I wanted to take my buy setup. My target would have been this high, right? The recent high.
Yes.
Now, as you guys can see, market already pushed to this upside, and it took out that recent high already.
Mm-hmm.
Market already took this recent high, so I cannot be waiting for market to be coming back down here before I continue looking for buys. I simply made use of recent structure. Before market took out this high, this was the recent structure it gave. Now, you guys should always take note of this. Before market takes out a major high, this is a major high. If market gives you a setup before taking out that major high, simply take your setup. No, don't wait for market to be coming down to this origin again. Do not wait for market to be coming down to this origin. Before this major high was taken out, market gave me this setup here. So I simply made use of this setup and I continued looking for my trade. So there is no need for me to be waiting for market to be coming down to 50% or to be taking out all these ones before I continue buying. I simply made use of what recent structure and I continued buying. Okay.
Yes.
So
Because
do you
one of
guys
the
have any
mistakes
other question?
because one of the mistakes I do make is I
Sorry,
get
sir.
to wait for that structure, the first that
If you get a recent structure before a major high is taken out, use your recent structure to continue buying or to continue selling. Don't wait for your origin. If you wait for your origin, the market not going to ever come to your origin. Just simply make use of what your recent structure and you continue.
all right. Thank you.
Now, if
Sorry,
you
sir.
guys okay, hold on. Let me explain something. Now, if you guys understand the concept of this external high and external low I just taught you guys, you would see you will see that all my trades I take, there are reasons I take my trades. I don't just come to the chart and just jump into any particular level. Now, if you say when market was bullish, as you can see, I kept on looking for buys. I was just looking buys. But even after this external high was taken out, let me show you guys something. Let me show you guys something very interesting. This just caught my attention now. Now, when we were looking for what buys, we're using the concept of what external high. I kept on looking for buys until market took out what my external high. Immediately market took out my external high, I left the market, right? Now, market now gave me what created a new high and it pushed back down. Now, this market has given me what a new external high. I kept on buying until market takes out what external high. Immediately market takes out this external high, it created a new external high. When market pushed back down, I kept on looking for what buys until market takes out what that's a new external high. Are you guys seeing the way I'm following the market? I kept on following the market. That is how you trade. If you check my chart very well, you will see that a particular level of my chart. Hold on, guys. Hold on, guys. Okay. Now, if you see the way I trade, I follow trend. I follow higher time frame direction. So when market gave me what new external high, I keep on looking for what buys to take out that external high. Immediately market takes out that external high, market they created what a new external high. A new external high. I look for my entry. I take my buys to take out what the new external high. That is how you follow trend. That is how you follow trend of the market. Keep on looking for trades to the upside. Why? Because the market is simply bullish from the higher time frame. Now, market now took out what? Market now took out the previous low and started selling, it gave me what? A sell market structure shift, and it gave me what? A sell break of structure following that market structure shift, indicating that what sellers are now in the market, and indicating that what I should start looking for sales. I should start looking for what? Sales. And as you guys can see, I started looking for sales. At this level, when the market started to sell, I kept on looking for what? Longer sales setups and shorter buys. As you guys can see, I kept on looking for more sell setups now. I no longer have business with what? Looking for longer buy setups. Instead, I'm looking for what? Longer sell setups. Why? Because the market is now bearish. The market is now what? Bearish. Do you guys understand? So you guys need to understand the concept of trend. Let's go to BTC. Let's see the trend, the way I follow trend in BTC as well. Let's go to BTC and see the way I follow trend. Now, immediately BTC gave me market structure shift to the upside. You can see I kept on looking for buys. I kept on looking for buys. Immediately it gave me market structure shift to the downside. I started looking for sales. I kept on looking for sales. Are you guys following? Immediately I see my market structure shift to the downside. I started looking for sales. Immediately I see my market structure shift to the upside. I keep on looking for buys. So you need to understand this concept of this external high and external low, so you can follow the market properly. You can trade properly. Now, if market give you a market structure shift to the upside and you define sell setups, you go switch up a sell. So you guys should avoid trading against the trend. You guys should avoid trading what? Against the trend. Okay. So any other question? Any other question, guys? Any other question, guys?
No.
Very good. So I'll be sending the recording of the class to you guys so you can go back and watch the recording and study. You guys should study. Study very well. Study very well. I'm not just teaching you guys these things so that you could just go relax. I'm teaching you guys these things so you can go back and study. Study these things very well. Understand them. Understand